Welcome to TMS Insights for April. It's Jeremy Hook and Ben Clark bringing you this update. As the market has gone ex-reporting season and ex-dividend, but there's still a lot going on in the market. Ben, one of the big areas of focus has been energy. This week alone we saw the energy white paper. We've seen a number of transactions. We know at the end of last year the oil price was caned. Last time the oil price fell so much, a lot of M&A activity. It's looking the same again now.
Amazing deal that's been announced this week, Jeremy, and with Shell making a $70 billion friendly takeover for BG or British Gas, which is listed on the London Stock Exchange. That's a $91 billion takeover bid, and I think it's the biggest in a couple of decades that the energy market has seen. So it's big news, and I think it's fair to say it's of relevance to us as investors because one of British Gas's biggest assets is the $28 billion project up in Gladstone, which has gone into production, the coal seam gas project up there. And of course Origin have got their project next door, which will go into production in the next financial year. And I think, given Shell own a lot of gas up there after taking over Arrow about 10 years ago, they would know the ground well, they'd know the economics of the project well, and it's a real vote of confidence given they've paid a 60% premium to the BG share price to pick up these assets. And to us, it's I think fair to say it highlights that these are great long-term assets that over short-term periods the market can sort of fall into and out of love with and can make for good opportunities. Yeah,
so certainly energy will be a major focus in the investment markets for the rest of the year. The other thing that happened, Woodside buying some Apache assets. Again, building up their portfolio with a strong balance sheet. So there's a lot going on in that space.
Yeah, and this is, Woodside, has got a lot of cash on its balance sheet. And personally, I think it will be worth to see what they do with that cash, deploy that cash. Hopefully, I would say better to use it at this time with very weak prices of a lot of their competitors, rather than keep paying big dividends. I think shareholders will do a lot better longer term putting that cash to work now. But as you said, they've been disciplined about walking away from projects. Leviathan, if they'd gone ahead with that would have been a disaster. And now they've got the advantage to take the advantage. Cash is an advantage to look out what they can buy.
Unlike most of the insights over the last few years, today we're talking a bit more about resources. Interestingly enough, on the front page of papers the last few weeks has been the iron ore price, which doesn't really get much coverage mostly, but we're coming into a difficult time for the federal government with the budget under pressure with 10-year lows on iron ore. And at the same time too, one of the biggest miners of iron ore in Australia, BHP Billiton, has lodged its documents for the demerger of the South32 assets. And we know that'll be a real focus in the months ahead. Ben, any take on these two companies?
Well, I think BHP is interesting in that the contrarian investor in you sort of says that is now, like when iron ore falls hit the front page of all the papers, including the Daily Telegraph, you probably start to think
it might be a buy time.
Right, and of course they're also a huge oil producer, which has fallen from $108 to $50 a barrel. So it's probably, I think, looking the most interesting it's looked for quite a while, BHP. And I think we would both agree that the South32 spin-off and clients will receive one South32 share for every BHP share they own.
That's subject to the meeting on the 6th of May, but we believe that'll happen. So
and South32 we think will start trading around sort of $3, and BHP will then be around $27. A mix of assets that have been thrown together to leave BHP with the true tier 1 assets in the company, and I think we'd agree in saying that it's not a business that we're going to want to be a long-term holder of once that demerger comes through.
That'll be a big deal. I think the other big deal that affects so many of our investments, but it'll affect directly our clients in some way, is the current discussion about the tax settings in Australia. And there's no doubt that there is in focus some potential changes ahead for superannuation. And all rocks will be lifted to find extra money to repair the fiscal situation. Super, though, Ben, likely to have some possible changes in the months or years ahead. Hard to know at this point exactly what the...
I think the consensus seems to be growing that there will be changes. and we hope that they don't mess around with it too much, because I think, you know, the more complications you create, it puts people off going into super, which it shouldn't, of course, because I think the overriding theme, Jeremy, will be that you will always be better off having money in super as opposed to outside super. Even if there's some tax attributable to it in the future that isn't at the moment, it will still be a much better place to park assets for the long term compared to outside of super. And you know, we'll be monitoring this situation. I think in the budget it looks like there will be some changes suggested, and you know, we'll be in touch with clients to let them know potentially how this affects them, what we can do to try and mitigate those impacts, and hopefully create some value to clients in terms of getting good quality structural advice.
I think that they're all very good points, and I think the additional point is, don't be put off or undecided about taking action where it is advantageous to use the current existing arrangements. Actually get on top of those things now, because if they are to change, you want to have made your moves before that time.
Absolutely.
So,
yep.
That's all we have time for in today's Insights. We'll be back again in May, and we look forward to bringing you all the news then.